Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thanks so much for joining me today. We've got a lot to cover today. Beautiful move in the market on Friday afternoon, which is pretty interesting. We actually came out of one of our favorite stock patterns, which is a push up, a couple of days down into a pause, into a rally. Getting followed through today. Again, the stock futures are up this morning. We got a lot to talk about. We're actually going to do a breakdown of Tesla from a technical analysis perspective, and when I would be comfortable looking at a new swing trade in that today. We're also going to go over some other electric vehicle stocks and some other stuff related to electric vehicle stocks, including Lucid, which actually has earnings after the close today. We're going to do a little bit of a deep dive into sector rotation. Our list of stocks has expanded dramatically. That matches the perfect criteria. I'm going to show you that. I think it went from 9 on Wednesday to 30 on Thursday to over 40 something stocks on Friday. So we actually lit up. Now, what does that mean? It means that basically there's a lot of stocks that are meeting that perfect criteria. Then we have to drill down a little bit further into which stocks are actually trade setups. So we have a lot to talk about. We're going to talk about a lot of stock picks today, but we're actually going to begin with Tesla today. So stick around. I'll be back in just 1 second. Okay, so obviously, thank you so much for joining me today. Everything we speak about here is for educational purposes. It's up to you to make that final decision. It's my mission to help you make better decisions. So let's actually get right into that today. I just want to actually start out with the futures, and then we're going to go straight into Tesla and a lot of the other electric vehicle stocks, including Lucid. Remember, Lucid has earnings today. You need to make a decision if trading into earnings is part of your game plan or whether or not you wait for the earnings to come out. How do you manage it if you have a winning trade or a losing trade heading into earnings? But make that decision now. Do not make it an emotional decision a little bit later, because then that becomes pretty tough to just execute, because now you're tied to the result there and you want to just make good decisions over and over again. So we're actually going to share the screen. We're going to go straight into Tesla, and we're going to actually work the chart in Tesla. First, I want to take a look at the ES futures. Are actually positive here again from Friday. So it's actually pretty nice that we're seeing follow through, which is really beautiful there. So we'll see if we end up staying up there. I do want to walk through the sector rotation and the stock list for today, actually heading into today's price action, which is essentially, I lost my screen here for a second. Here. So we're going to go over basic materials, going to go over technology. Industrials kind of work their way up, and they're actually having a good month, but they are not really that strong. There's not that many stocks breaking out in the industrial sector. So we're actually going to focus on the top two. I'm going to give you a list of stocks to buy, but first, we're actually going to take a look at Tesla. Also want to give you a quick look at the list of the bigger picture. You can see it's all the way up to 46 stocks, which is pretty impressive compared to where it was even just Wednesday. And if we take a look at the chart of the market on Wednesday, you can actually see why we're actually still kind of stuck in this box. If you remember, a lot of the time that we spend here together, especially on social media, is that we want to identify how obvious is the order flow. Is there room to go, or is it kind of stuck in a box? And right now, the SPY is kind of stuck in a box. We finally got a little bit of a breather where we pulled back, held that bid, traded into a consolidation, and broke out on Friday. And if you didn't happen to see the price action on Friday and you only saw the end of the day, we had a vicious move after it kind of did nothing for most of the morning and then rallied again at the end of the day. However, we need to assess this and use this information for determining what is our follow through, what is our position sizing, how do we start to work a trade right now. So a lot of the ideas that I have in my game plan today, they are two-step trades. We started calling them two-step trades, I think just last week, actually, because it's a little bit easier to identify or understand as a game plan that you don't always go in with your full share size. Some situations might be a little bit further than the optimal entry. Some situations might be just breaking out. For example, as we talked about last week, Tilray, we did a really deep dive in Tilray and this move to the downside and what it meant for position size. And you can see now it actually finally moved a little bit away from $12. It's up at $13.50 right now. Still early, obviously pre-market. But this is a picture of a chart that you want to take a look at where you need to understand this chart is just starting to get to that point where it's reversing several months worth of order flow to the downside. But if we look at something like this, like BX, it's already got bullish order flow and it's resting right at all-time highs. So we're not looking for this to be a potential reversal. This already has obvious bullish order flow. So the two different situations are critical to understand, because sometimes having the wrong share size could shake you out of a position, even though it's a great idea. So when you get that first turnaround, it's the first time smart money is digging in and starting to buy that trade. We have to mimic what they're already doing. So how does that translate into Tesla? Well, let's take a look at Tesla, because Tesla actually is bearish actually in multiple time frames. Not shocking that it came out. If you remember, about a week and a half ago, we said that that news with Hertz is going to be a kind of a sell the news type of story. Then Elon Musk went out there with that poll on Twitter talking about selling $5 billion worth of Tesla stock. And quite honestly, the stock hasn't been able to recover since then. If you remember the video that we did, we had right around the 1,040 level as the retracement that we were looking for, and we're still kind of right around that level. So we essentially started from where it broke out, just below 800, up to where it went up to, which was 1,240 or something like that. We had right around 1,040 as the level that we were looking for. Now, it has pulled back, but if you remember what we did in Lucid last week, we went from order flow on the monthly time frame to the weekly time frame to the daily time frame, and broke it all the way down to where we expected it to turn around and exactly what prices. So we're going to do the same thing when we work Tesla as far as multiple time frames. The first thing we do is we start out on the monthly time frame. And if you've been a regular viewer of the channel now, you should be able to spot immediately what that looks like on the monthly chart. And if you happen to not be, please do me a favor, click down and hit subscribe so you get updates on new training that we have coming out, as well as smash that like button if we're giving you some value. So you should be able to spot it right away. Tesla right now is a bearish U-turn on the monthly chart. So that's not positive for the stock. It actually traded through the previous month, came back down, is closing as of right now below the opening price, and it's closing below the previous high. So on the monthly time frame, which is right as I'm doing this is November 2021, Tesla has short-term bearish order flow in the context of that much longer time frame. So now we need to start breaking it down. At what point would we start to feel comfortable that the longer time frame is starting to reassert itself back in the direction of those all-time highs? So we always talk about that the weekly chart is how we identify reading the tape and whether or not it's changed, and we go a little bit deeper into significant prices. So now we work our way over in Tesla to the weekly chart, and the story is actually a little bit worse, because now not only did we trade lower, and again, the language that you want to use here is well offered, and well offered means lower lows and lower highs. On top of that, we actually traded, we closed in the lower portion of the week. So here's one of the biggest questions that we get now is, how do I predict what I expect to have happen? And at what point do I start to buy again? Best case scenario for Tesla this week. And again, you need to know what's best case, because once you have perfect, everything works away from perfect. So best case scenario is Tesla opens higher and we go well bid again. So remember, right now the weekly chart is well offered, which is lower lows and lower highs. That's a fact. Regardless of what you think about Tesla in the long term, Elon Musk, all that kind of thing, we're trading for the moment. We're looking to be making money right now between Monday and Friday. We're looking to make money between now and the end of the year in the stock, right? We're not talking about investing. We're talking about right now. Best case scenario, Tesla would need to go well bid, which would mean that the stock would need to get back above 1,200, which is roughly 200 points away from where it is right now. So that's got a little bit of a climb. So if that's the case, what is the minimum criteria that I'm going to be looking for to be a buyer of Tesla this week? Well, the first thing you know is that we look at that one price. The one price that's significant is the opening price on the weekly chart. So if we use this same line here and we take a look at last week's weekly chart right there, that is the opening price and how Tesla traded last week. So if we scoot down to the daily chart, you can see that from Monday's opening price, we were actually below it the entire week. So for the most part, Tesla last week did not give me any opportunities to look to get long. There was plenty of other opportunities that had bullish order flow on the monthly chart and the weekly chart, and we're also trading above the opening price. So Tesla was not on my radar last week because it didn't meet the criteria. And this is very important. We get a lot of questions from new members into the boot camp. Should I be buying the stock that's going down? It looks like it's potentially reversing. That's hard money. There's no other way to put it. We want to be involved in stocks that already see smart money buying, already are moving in the direction that we want to get on. And then we just kind of piggyback. The second part of after stacking the order flow, then we go into reading the tape. We get a lot of questions here, which is a really good one. What does tape reading mean? Tape reading means that we are buying as close to the optimal entry as possible. Then when the stock moves in our favor, the second part of tape reading is having a process for making as much as you can on the winning trades. So I just want to repeat that because it's definitely something you might want to watch it again or read it again. Tape reading, the literal definition is price getting closer to or further away from a significant level? So is it moving up or down, right? Now, most traders can read the tape like that because once you're in a position, you're reading the tape better than anybody because your heart's going up or down. The trick, and to become a great trader, is to understand how to read the tape before you're in the position. So we just gave you the scenario in Tesla. Let me zoom that out just a little bit. You can probably see that line right there. Let me actually, I want to make that a little bit thicker so that you can actually see it. So yeah, there you go. So well bid on the weekly chart is the minimum. Now, heading into this week, Monday, we're going to have an opening price. So now we have to read the tape in Tesla. We already know the bigger picture that we're looking for in Tesla. We want the weekly chart to start to reverse back into the uptrend that we've had earlier in the year. November so far has selling. So that's the technical picture of Tesla. But now we're forecasting, we're scripting out our success of what we need to see happen this week in Tesla for us to trade with a little bit more conviction, for us to start building a position, for us to maybe even go with a little bit more share size. We need Monday's price to open, and we need to stay above that. That's the first sign of reading the tape for Tesla. If we open and the weekly chart is green, so last week the weekly chart was red right here, we didn't look for buying opportunities. We went to other stocks that were in much better situations to look to buy. Lucid was one of them actually last week, and some of the other Bitcoin related stocks. We'll take a look at those in a minute. So again, you want to write this down because this is going to be fun for us to do as a community here on social media. Every day we'll start mapping out the Tesla situation and whether or not it's unfolding in exactly the way that we wanted it to unfold in order for us to justify buying the stock. Now, here's the key, and I get feedback on this all the time. Pete, you said we were looking to buy that stock today and it went down. Okay, but if it doesn't do what we want it to do, we just leave it alone. It needs to hit certain criteria. So if we're looking at Tesla today, if Tesla opens and starts to trade down and stays below that opening price for the whole week like it did last week, it's not even in my game plan. So I'm not losing money because I'm not even in it because it didn't do exactly what I wanted it to do. So think about what we're looking for now in Tesla this week. We want it to open, stay green. Best case scenario, if we can get back above 1200, then we start to look for new opportunities to get long. Okay, that's the script for the entire week. I want you to write that down, and I want you to really start to think at a deeper level. If you really want to start to elevate your trading, you want to see your account grow month after month after month, the first thing is learning how to not lose. And that means staying away from those situations where the stock is going straight down and you decide, well, it was 500, now it's at 250. That means I need to buy it because of how far it's falling. No, I'm just going to say it straight up. We're all friends here. I'm going to give you advice on that. That's dumb. It's absolutely dumb. I did it when I first started trading. It is too easy to be consistent and see your account grow like this when you are piggybacking the smart money that already is showing demand for the stock, as opposed to the smart money is dumping the stock and you want to be the only person buying it because of how far it's fallen. I am telling you, make trading simple, make trading repeatable, and ultimately your results will end up being predictable. Everything we just talked about in Tesla, 2 hours before the market's going to open, we know exactly what we need to see. If it happens, we get involved. If it doesn't, we just step back and we look for other opportunities. So remember, you need to have a scale of Monday morning, here's my perfect ideas. And then I have other ideas I'll consider if certain things happen. And we just outlined that whole thing in Tesla. So kind of cool. No matter what the stock does, you know exactly what you're going to do before the market even opens. And I keep telling everybody this all the time. And new members of the boot camp are starting to be like, oh my gosh, I can't believe it was that easy. The trading part of what we do is easy. After the market opens, it doesn't matter if you're swing trading or day trading. So let's just keep that out there. After the market opens, you already know exactly what you plan to do, both from an entry, position, and trade management perspective. So the hard part is what we just talked about. The hard part is learning how to identify order flow, stack the order flow, read what's going on in the market, and then read the tape to get it as close as possible to the optimal entry. So again, there's only 3 pillars. You want to write these down. Stacking the order flow, which is a small part of what we're doing right now. Reading the tape is number 2, which is getting it as close to the optimal entry as possible. And number 3 is reversing risk, where you avoid those ideas that just don't make any sense and have the right share size. So I'm telling you, trading is probably a lot easier than you're making it right now. If you're struggling, if you're frustrated, if you're seeing your account go back and forth instead of making money, watch what we just discussed over and over and over again and ask yourself, are you taking it that one step further? It's not complicated. Are you taking it that one step further where you're scripting out what you want to see, or are you being lazy and just saying, oh my gosh, I saw something on Reddit last night. I have to get involved in that stock because it has a big short float. That's not trading. That's hoping. You don't want to hope. You want to always be in control of the process. So if you have to watch this again one more time for what we just talked about, how exactly we're waiting to see Tesla unfold this week, we're going to take it one step further. Watch this video again. So now if we start to go above the opening price on today's print, so Monday opens and we're looking to see if Tesla's going to be green or red on that weekly chart, then we take it a step further and we want to make sure that the stock goes well bid on the daily chart. So well bid means we are now looking for this. We're looking for higher highs and higher lows on the daily chart. So we'd want to see that happen today, which from Friday's candlestick, we want to see a higher high and a higher low. If that happens, then we start to say, okay, now we're cooking with gas. We're above the opening price. We have well bid. Today, smart money stepped their toes in, paid higher prices, held higher bids, held it above the open. Great. We're starting to see what we scripted Monday morning at 7:45 in the morning. As this unfolds, now you trade with absolute unshakable confidence because you knew what you were going to do well before you needed to do it. So now let's work our way over into some of the other electric vehicle stocks. Obviously, we talked about Lucid today, and Lucid has earnings. So Lucid, you can actually see on the weekly chart, giving you an idea of what we're talking about. Pretty interesting here. We actually went well bid 2 weeks ago. And for the most part, it was above and well above the opening price. So 2 weeks ago was a really strong bullish move in Lucid. Then what happened last week? Last week was what is known as a melted candle, and then another melted candle where the distance between the open and the close was really small. So it was bullish because it went well bid. You could see higher highs and higher lows for those 2 weeks. However, from Monday through Friday, it opened and closed in very close to the same spot. So think about that. If smart money, all these people with research analysts and all these opinions are pushing the stock back and forth from Monday's opening price all the way to Friday, and it basically opens and closes in the same spot, we call that indecision. So you see how we're starting to really put these pieces together? A large green candlestick opens near the low, closes near the high. Somebody was in charge of that. Somebody with deep pockets was in charge of that, and they held it that entire day, that entire week, that entire month. Right now in Lucid, heading into earnings, we're seeing indecision. So there's a little bit of indecision heading into today's earnings announcement. So that means on the weekly chart, we're not seeing absolute conviction. So if I'm not in a position already, I'm waiting for the earnings to come out, and then I'm looking to piggyback the next move if the buyers step back up. So that's how I'm looking at Lucid right now. I want to go over a little bit into some of the other American automakers that are getting into it now. Ford, actually a really nice push up and a pause. We're looking for Ford to catch a bid today and make a new move. Hopefully we get over $20. General Motors had a really hard time getting over 59, has now really rallied nicely through 59. So again, I want to be clear here though. We're not talking about entries and exits here right now. What I'm doing is I'm trying to teach you how to stack the order flow. So at the very least, you have what we might call the right stocks in your game plan. Then you start to fine tune the tape reading part of it where you're buying near the optimal entry. You understand once it hits your initial profit target that you shift over into what we call profit maximizer. We have a whole system for maximizing the profits once they start moving in your favor. That makes you a trader. stacking the order flow, reading the tape, entering at the perfect time, and then exiting for a profit, holding it as long as you can because you understand and have what we call the profit maximizer. So GM and Ford both looking good. We're looking for them to maintain those levels. We're going to kind of shift over now into electric vehicles, the Chinese electric vehicle stocks. I'm going to zoom out just a little bit more here. So the ones that we are pretty much watching every day, Xpev. Xpev finally got over this breakout level. Now we're looking to see if it can maintain the bid. Looks like it's opening right around that level right now. So we're actually going to go over to the weekly charts because it's probably a little bit easier to see. So what did Xpev do last week on that weekly chart? Well, it traded below the previous week, came all the way back and closed above the open and closed above the previous low. We just showed you that that is what's known as a U-turn, right? Traded below and came all the way back. It also took out the previous high. So it took out the low and it took out the high in the same week and closed near the high. So that's what's known as a bullish engulfing candle. A bullish engulfing candle usually follows through because if it breaks down, short sellers come in and they're looking for the price to go down. But if it breaks down, completely reverses and closes up near the high again, you got one side of the market caught. So we're looking for Xpev to stay above this level, and the next level after this is roughly $10 higher. NEO is another one that we've been keeping an eye on, and this stock has been very challenging to trade recently. It got an upgrade from Goldman Sachs about a month ago to $50. Took off. We had a first piece of our swing trade on. We added to our swing trade as it started to rally. But now you can see here, look at last week. This should, like that, you should be able to tell in a heartbeat. Opened and closed in basically the same spot. It's so small, you can barely even see the open and close in the body of that candle. So what does that mean here for NEO, for this stock? It basically means it spent 5 days of trading and opened and closed at almost exactly the same spot. That was a challenging week. Remember what we just said about Tesla. We want Tesla to open on Monday, and as that weekly chart unfolds, all we're going to do is say, is it green? It's literally, again, we're touching on a really small part of what we do in the program. If you want to learn about the bootcamp, click the link below. But I want to give you stuff that you could look at the market today. As Charles says here, it's our job, our mission to make confident decisions, right? When that market opens, you want to be like, I know exactly what I'm looking at. So NEO last week was very challenging. It was above the opening price, down, up, and down. So we just left it alone. I actually made a comment to our bootcamp last week. I'm not trading the stock. It's not doing what I needed to see. So then we shifted over into some other stocks that were super obvious. So right now, NEO did break this longer-term downtrend. It does have that Goldman Sachs upgrade. But as of right now, even though the stock is well bid, it spent 5 days and went nowhere. So I need for that to change in NEO this week for me to start to step up. So you see how we're making the argument across all of these stocks well before the market even opens. So now when you put those stocks in your watch list, you're like, okay, that's the price I'm looking for, and I'm going to set an alert for that price. I'm not going to get in yet, but if it gets up there, that means something. Then I'll start to do something. And actually, I'm going to bring up a different stock that we get a lot of questions about, PLTR. And one of the biggest questions we get about is, oh, this stock is so polarizing. Everybody loves this stock. I love the CEO. What do you think about PLTR? Well, PLTR really hasn't moved since February. It's in the news every single day, pretty much. A lot of people love this CEO. I understand that. I understand that they have amazing, amazing technology. But what is the market telling us right now about the stock and what the market believes about the shareholder value and how that relates to the stock price? Right now, based on the revenue that PLTR is, right now, based on the cash flows, and remember, when we look at earnings, we're buying the future cash flows. Right now, the market is saying this stock is having a hard time being valued higher than $28. I understand there's a lot of people that are so fervently excited about PLTR. I understand that too. Their technology is amazing. But if we're looking to place trades, we need for the stock to do something so that if we decide to tie up our capital, we want it to go to work. And then we want it to go to work again. And then we want it to go to work again. That's how we can move from one trade to the next. That's why it's our job first to spot the order flow and then read the tape to see if there's a trading opportunity. So for me personally right now, and I mentioned this to somebody in the comments from last week, I have an alert set for PLTR at 28. I'm not doing anything until it gets through there. We have some people that are like, well, I could trade it between 24 and 28, 24 and 28. Fine. There's no order flow. Right now, that's the right place. I'm not saying you can't do that. What I'm saying is I want to find something that has smart money demand. Somebody with really deep pockets, a hedge fund, it doesn't matter who it is, right at this moment is paying higher prices and supporting higher lows. I want to piggyback that person because they're already committing real money to that idea. I'm just going to look for a spot, read the tape, find the optimal entry, and then look for that next move to the upside. Very, very different ideas because this one right now is stuck. There's no other way to put it. I want to trade where the profit potential is obvious and the direction it's moving is obvious so that we could just piggyback on board. I'm not saying I don't like the stock. What I'm saying is I like it above 28 because that's where there's reward potential. I keep doing this. I don't know why I keep doing that. I guess because I really want to emphasize the point. So remember, if we choose to accept risk, we are accepting risk, and you want to write this down. We're accepting risk because the likelihood of profit targets being hit is increased dramatically. So if we look to buy PLTR in the state that it's in right now, it'd be very hard right now for somebody to tell me after 1, 2, 3, 4 earnings on that, 5 earnings reports right there right now. That's 5 quarterly earnings reports, and the stock has not been able to get above that level. You'd have a hard time right now convincing me, based on what the market is valuing this stock, you'd have a hard time convincing me right now that you have a really good chance of hitting your profit target. How could you argue that? It hasn't moved. That is what the market's telling us. I love the stock as far as a company, but I like it better through 28 when the smart money steps up and starts doing something obvious. That's the price level that I'm going to be looking at. Okay. So again, what did we just do? We just scripted out our next highest probability trade for a PLTR. Very similar to what we did with Tilray, where it broke down, went sideways, and we did the same thing with CHPT, which I'll bring that up right now as well. So remember, we started this whole thing out talking about the charts in Tesla. We did technical analysis for Tesla. So now we're kind of moving a little bit sideways into stuff that's related to electric vehicle stocks like Tesla and NIO, Xpev, GM, and Ford, the charging stations now. So remember, you need to start to think these things through. So think about what's going on here now. It broke the downtrend, which was basically from August. Bearish order flow, pushed down and a pause, pushed down and a pause, pushed down, finally broke, and now we have a new move to the upside. So as long as this move to the upside remains in place, we're going to look for optimal entries in ChargePoint, in Blink, BLNK. A little bit less obvious. Again, just go like this really quickly. You can see that this stock is rallying, but it's not as obvious. You're not seeing clean pushes and pauses. So keep an eye on BLNK and CHPT. Which of those two would you feel more confident bidding into? For me personally, CHPT at this moment, because it's orderly. Smart money's buying it, then taking a break. Buying it, then taking a break. Remember, we make money when they're buying it, and we manage risk during that pause. BLNK, while it's rallied pretty hard and had a big day, 12% on Thursday, very hard to manage risk where the buying and selling pressure is kind of all over the place. Want to talk about one other one in the same area, which is EVGO. EVGO exploded after it broke here, right? Big bullish gap here. Paused for 5 days before taking off. So remember what I just said. And I know Catherine Goodson wrote this down last week. I want to say it one more time because I really want to inspire you to think a little bit deeper than you might be doing right now, but at the same time, keeping it simple. All I'm trying to do is point stuff out. When you look at a chart, be like, wow, I didn't see that before. I want you to see things differently so that your conviction level just goes through the roof. And when you're at a barbecue on the weekend, or when you're at Thanksgiving in was it 11 days, something like that, you're talking about charts. Like, no, I'm going to hang out in that stock until it crosses $52 because I have my plan in place. Until that happens, I'm not going to do anything. That's the kind of confidence that you want to have when you look at the market every single day. Again, we're just giving you a little small piece of this. You want to learn about what we do in the boot camp, click that link below. So anyway, EVGO exploded, paused, validated this break here, and then took off. So now we're looking at a new optimal entry here, which it needs to trade above, basically above 19. So right now I have my line in the sand. If EVG opens lower and goes down today, I'm not even doing anything. I want to see it get above 19, make a run towards 22, and then new levels through there. The market has attention on these stocks right now, which is pretty interesting. So we went through a lot of stuff, starting out with Tesla, the exact price action we needed to see in Tesla. We transitioned over into the weekly charts on NEO and XPEV. NEO's been a mess. XPEV, a little bit better price action. We're looking for that to go well bid. And then we talked about GM and Ford and the levels that they just needed to break through. Then we just kind of sideways move over into charging stations for those same electric vehicles. Now we're actually going to get into the stocks that we promised, which are the stocks that are dominating the sector rotation. So basic materials and technology stocks, I'm actually going to give you some ideas right now to take a look at, to consider putting into your game plan for this week. So starting out with basic materials, which you can see here is at the top of the list. We're going to do a deep dive into, which we mentioned on Friday, and hopefully you were on top of this on Friday. MP was the first one. CF, another one. Alcoa, which actually reversed this bullish move to the downside. Bearish gap, bearish gap, bearish gap, bullish gap again. So we're looking for some follow through for Alcoa, but Alcoa needs to be above 52. So again, we need to map that out. So we'll set an alert at Alcoa. And why? Well, look, it got up there and failed. Got up there and failed. So we're looking at Alcoa over 52. So those are some of the basic material stocks I'm taking a look at today. And now we're going to shift on over into, actually, you know what? This is one last one we could put on that list. SHW is another one that meets the criteria. And you can see why. Again, how obvious does this start to become now? A push and a pause, a push and a pause, a push, and now we're taking off. So this is a little bit further from the optimal entry. So what we need to see now is a pause before we look for this next move. Right there, you can see it's marked off as the optimal entry. We're pretty far from the optimal entry. So now we're looking for the next optimal entry, but this is the right idea. We're just looking for a new entry. So now we're going to work our way over into the other part of stocks that are up on our radar, which is technology stocks. Obviously, the sexiest part of the market, right? So working our way over to technology stocks, TTD, coming off of earnings last week. And you can see here, here's the earnings report. Exploded, paused, and moved again. So we're looking for follow through. As long as TTD stays above $100, that's my line in the sand. And remember, I just want to come on the screen again one more time. Remember, everything about trading is scripting it out first. If it does what you expected, great. Get in there with confidence. If what you scripted out starts and then doesn't follow through, no big deal. It's a business expense. You get out of the trade and you look for the next idea. So I'm looking for TTD today and this week to follow through on the earnings, which was bullish, and stay above 100. Think about what we just said. There's two different things that we're building into that argument. If it stays above 100 and the buyers who bought it after earnings came out are still there, I am going to be confident looking to buy that stock. If it stays there, starts there, goes above, and then pulls back, I'm like, all right, that's not what I expected. Go to the next trade and look for a different opportunity that is doing exactly what I expected to do. But TTD is on the list. Remember, you might want to watch this more than once or twice because we're going through how to think and act like a professional trader. Read a really good book recently. I know a lot of members of our community are watching it as well, called Atomic Habits. Something that he talks about all the time is every action you take is a vote for who you are. That's pretty deep, right? So think about this in trading terms. Are you taking the actions to be the kind of trader that you want to be? Are you stacking the order flow? Are you buying it near optimal entries? Are you holding it long enough to maximize your profits? Are you getting out flawlessly if it's not doing exactly what you want? Are you taking the steps to think and act like a trader who has conviction and knows exactly what they're doing? So TTD is one of the tech stocks I'm going to have on my radar this morning. Riot, we all know it's a Bitcoin mining stock, but finally got through this level. So it needs to stay above 40 at this point. It's all the way up here. You can see it's actually up $7 higher. So we shift over to a different entry. Unity Software, which had a tremendous week last week, DOCN, as well as DOCS, all rallied hard last week. So we're looking for the optimal entry in quite a few of these. One other one that I want to give you that is setting up, actually two of them. We're going to finish up with Asana, which is resting right in front of all-time highs, and JKS, solar stock. You can actually see here if we bring this over here. And over here, you can see clearly once, twice, and you actually zoom this all the way over here to see how significant this level is. Look at that. Acted as big support over here. Then it came in as resistance, resistance, resistance. Sellers having a hard time punching this through 62. So again, setting it up, we're looking for it through 62 before we start to do anything. Let me see. Hey, Min, how'd your kids do in that soccer tournament this week? Let me know. I know you sent over some pictures. Let me know how your kids this weekend in the soccer tournament. Let me see. Is there a certain age for the boot camp? No, we day trading and swing trading. Absolutely okay for no age group. Actually, I think our oldest member in the boot camp right now is 76 years old. Is the oldest member that we have right now. The youngest member is actually a teenager who is learning how to trade with his dad, which actually I think is pretty cool. Let's see. I just want to make sure I go into some other ones. Disney, I don't have an opinion on right now. It's just sideways. And it actually traded lower after earnings came out. Let's see. Charles, how do you identify commercial purchases in volume from Robinhood type customers buying heavily? Well, that's a part of tape reading, Charles. We obviously just touched on tape reading just in its smallest part today. I can't give away too much because that's what the bootcamp members get. So I want to point everybody in the right direction that everybody can make a decision if you want to join the bootcamp. Look, it's only $295. It's 30 days. It's not a subscription. You can continue if you want. We discussed that a lot more in the bootcamp. Let's see. Susan, Google set an alert. Yep, that's cool. Very cool. Also, Google alerts for news stories, which is a big part of what we do as well. All right, everybody. Obviously, I want to say thank you so much for joining me today. I have to head over to our bootcamp game plan meeting, which starts in a little bit. We also have our coaching call tonight. Our Monday coaching calls, at least 90 minutes of pure awesomeness because we're going deep dive into the roadblocks and obstacles that our new members have and trying how to get past those the quickest. So you start to have that confidence. So if you want to join tonight's coaching call, click the link below and learn about the bootcamp. The coaching call is 6 o'clock tonight, Eastern time. And then we have another coaching call on Wednesday as well, just in case you didn't have all your questions answered tonight. We have a lot of coaching in the bootcamp because I want you to succeed. Anyway, have to head over. I got to get over to the other call. We did a lot of stuff today with technical analysis, reading the tape, understanding order flow. Let's track this together this week. JKS over 62 is the level we're watching as well. Have an awesome day, everybody. Thank you so much for joining me. I really, really appreciate it. Remember, Monday through Friday, 7:30 a.m. Join us every day. Come back with questions. I'd love to hear from you. Take care now.